Hey, what's going on, guys? It's Ricky, and I tried to make the most out of what I could from today, and it looks like a handful of you, really a majority of you guys, agreed with me. So I'm going to start sharing my screen so you guys can see exactly what it is that I'm looking at. The market sucks. The market's been sucking for a total of 7 days, and today is no different. Like, if you look at NASDAQ and where it actually ended, look how pathetic this is. It ended 0.01% in the green. And if you look at almost every single day, it's been a roller coaster that always brings us back nearly to zero, right? We sell off, and then the next day we recover, and then we sell off in one day and we recover by end of day. We sell off and then we recover. We sell off, and then again we had one red day. Then we make a full recovery the next day. So again, it literally makes no sense. There's so much consolidation going on right now, and today is no different. Today we started the market, or we started the open in the green. I was like, okay, we're about to potentially test previous highs of 322 and actually make new highs. Nope, got rejected, and it literally closed at where we closed at yesterday. So what's the takeaways from this? The market's not selling off. The market is not showing signs of lower lows and lower highs. I guess that's a good sign. It is showing a lot of signs of consolidation, so therefore it's not showing signs of progress, which is not the best sign. But why is this happening? Again, I'm going to keep today's video super short and sweet because I feel like we all deserve that. After what we've been through for the past 7 days of how absolutely boring this has been, I don't want to waste your time anymore, right? $1,400 on the day on TQs, and then $3,000 on the day on SQs. Again, a very, very slow trading day for me in comparison to what I normally make and/or right my takeaways from the day. But my biggest takeaway is this. I tried to have a better understanding of why there was so much selling pressure really early on into the market, and then we just consolidated for the remainder of the day. If you look at this, it's a beautiful setup in the sense that we sold off and then literally did nothing, right? So much consolidation down here, no signs of progress on the upside, no signs of progress on the downside, just a waste of a day, right? If you're part of my LPP team, you saw this all happen live. But other than that, that was the most exciting part of the day, and that happened within the first 30 minutes. Within the first hour of the market open. And this is why we sent out, this is why I uploaded the video that I did earlier today, is I wanted to make it a habit where we are encouraged to not be afraid to just move on with our day, right? We set alerts just in case anything does happen. We can always revisit this. But in case nothing does happen, it's not like we're watching paint dry. And I don't know about you, but I'm speaking from my experience. I have made so many mistakes in the past before where I just force trades, and I spend hours of my day hoping something happens, and then it never does, right? So today I tried to play very oversold and overbought levels on both sides, and I walked away with $4,500 profit. I'm grateful for it. I'm just fed up with how the market's been trading, and I know all of you guys agree with me. But Fed Bostic, who again is the Atlanta Federal Reserve president. So first off, I want to make sure that you are all aware that he doesn't have any voting rights when it comes down to the next interest rate hike. I just want to make sure that you are aware. I'm not saying that he does, but he is someone that represents the Federal Reserve, right? With that being said, he says that he believes that there is one more move, that one more move should be enough. He said that today. And the reason I'm sharing this with you is, well, what exactly does this mean, right? It's in context of the next FOMC meeting, right? We talked about this yesterday. The next FOMC meeting is on May 3rd, 2 p.m. Eastern time. And the reason that this is important is because, again, very simple. It was to be expected that when Silicon Valley Bank was failing, that the Federal Reserve was going to have to stop its fight against inflation, because if it continued to raise rates, it would hurt larger banks, maybe much more than what we've already experienced. But what happened yesterday, Monday, and also on Friday supports the case that larger banks such as JP Morgan and Bank of America actually did better because of what happened to Silicon Valley Bank. People like you and I, depositors, were taking money out of regional banks, which are smaller banks, and putting it into larger banks such as JP Morgan and Bank of America. And that's what those earning reports supported. So if you think back to what originally caused the market to go up, it was that Silicon Valley Bank was failing and that the Federal Reserve was going to pause. So if what Bostic is saying is true, then the market should be getting ready for a potential pullback. Obviously on YouTube, we use crash and all that stuff. I'm here to be open with you guys. If you guys trade based off of titles, then you have bigger issues, right? But the idea is the market rallied when the idea was entertained that the Federal Reserve was going to have to pause. If the Federal Reserve actually continues to raise rates, even just one more time, the market will most likely react in a negative way. Even if it's just a quarter of a basis point, it's still something that will cause the market to react in a negative way because it wasn't already factored in. I think that's what we have yet to experience. Again, there's no reason to predict the future. It's just to prepare. And as long as you're aware of what is being put in place as an expectation for the next FOMC meeting, then I think that's what's important. And that's what I feel like my job here on YouTube is, to inform you. And again, you guys can learn more about this. This was actually shared by CNBC, and learn more about Bostic's speech, right? It was a public speech. You can actually look a little bit more into it and see why it is that he justified that the Federal Reserve at least has one more move that should be enough, and then they can entertain the idea of actually pausing interest rate hikes. And that would actually be very interesting to see, because remember, this is the last thing. It was originally expected that after Silicon Valley Bank failed, that the Federal Reserve was going to pivot, and that 1.25% is what the pivot was going to actually cut off of our current interest rate, which would mean that interest rates would go down and economies thrive during lower interest rates. That would cause the market to skyrocket. But if they continue their fight against inflation, and if they continue to raise rates, I just want you to understand how that would negatively affect the stock market because of what currently is expected to happen. So let me know if this all makes sense in the comment section. Again, I don't want to take too much of your guys' time. You guys know what we do here. You can watch me trade live every single day. I do it exclusively with my LPP team. It's not free, right? It's a one-time payment, lifetime access, and you also get entered for the GTR giveaway. If you're tired of trying to figure this all out on your own and you want to be able to watch me trade live, it's the second link in the description down below. If not, I wish you nothing but the best. Other than that, again, do not forget to enter our GTR giveaway. And if you want to learn more about that, on how you can get entered, that's that fourth link in the description down below. I hope that we earned a thumbs up. If you're tired of this super slow market, feel free to share your thoughts down in the comment section. Like always, let's make sure that we end the year on a green note. Take it easy, team.